Are you eligible to contribute to a health savings account, an HSA? If you are, you've got a couple ways to contribute money into it, but there is one best way to contribute to the HSA. I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Is there a right way and a wrong way to contribute to an HSA? I don't know about a wrong way, just, well, we can get into that, but there definitely is a right way or a preferred way or a best way. And if you have an HSA available to you and you're able to contribute in this preferred way, I'm going to want you to do it. All right, so if you have an HSA eligible high deductible health plan, a qualifying high deductible health plan, that means you're eligible, you're able to open a health savings account, an HSA at your bank, credit union, at Fidelity or Vanguard or wherever, okay? You're able to. You've got to have a qualifying high deductible health plan. You can't just have any health insurance that, oh yeah, I think that feels like it's a high deductible, I'm gonna contribute to an HSA. No, it needs to be HSA eligible. It needs to be a qualifying high deductible health plan. And then because you've got that health plan, are you forced to do an HSA? No, it's your option. It's your choice. You are able to, you don't have to. I'd encourage you to do it though, because if you're able to, that qualifying high deductible health plan, anytime you go to the doctor, you get a prescription, something like that, you're gonna be paying out of pocket, right? Until you reach that high deductible. Well, would you rather pay just out of your pocket with after-tax dollars, or would you rather pay with pre-tax dollars? I pay it with pre-tax dollars. Again, with the HSA, the money that goes into, the money that you contribute into it is a tax deduction, okay? Any interest you earn on that or any growth on that is tax deferred. And then when you use that money for a qualifying medical expense, and I mean, that's a pretty liberal rules there. You can use it for all sorts of things, but an eligible medical expense, then it comes out tax-free. It's the only thing I know of in the tax code that's pre-tax in and tax-free out. That's better than the IRA, it's better than the Roth IRA, better than the 529 plan. The HSA is unique in this regard. So if you've got that qualifying high deductible health plan, I would encourage you, get that HSA open and start funding it. You have until your tax filing deadline of the next year, so April 15, to fund your HSA for that previous year. However, your health savings account needs to be opened. You need to have an HSA open during that year. So even if you're listening to this and say, I've got a high deductible health plan, I don't have the cash flow to fund the HSA yet, maybe I will next year with my tax refund or I get a bonus or whatever, get that HSA open this year so then you can fund it. All right, so what are your options to fund it and what's the very best way? When you contribute, when you contribute, say just out of your checking account, you've got X amount of dollars stored up in your checking account, you decide, I'm gonna open an HSA, and you just write a check to fund your HSA. When you do that, that becomes a deduction on your tax return. It's a deduction on the front page of your tax return, so unless you live in California, that then creates a deduction on the front page, you save federal and state taxes. In California, they don't recognize the HSA as a deduction, it's an add back for the state, so you only save federal taxes, okay? But that's if you're making a contribution right out of your savings account, your checking account directly into your HSA. That's good, but that's not my preferred. That's not my number one. That's not my favorite, the best way to fund the HSA. The best way to fund the HSA, if your employer allows, is directly out of your paycheck. Why? Well, number one, I mean, I like that it comes right out of your paycheck. You don't need to hassle with it. But the primary reason is right out of your paycheck, it avoids federal taxes, it avoids state taxes if applicable, but it also avoids FICA taxes. That's right, it's an extra 7.65% savings on those dollars, okay? Those dollars, if they come right out of your paycheck, go directly into the HSA, avoid FICA tax, avoid that 7.65% tax. Now again, Your employer needs to allow this, okay? But most do that have a qualifying high deductible health plan, and you're going to want to take advantage of it. When that happens, that HSA contribution, when it shows up on your W-2, it shows up as a deduction, okay? I think it's code W in box 14, and that means it's exempt from federal, state taxes if you don't live in California, and it's exempt from FICA taxes. Saves you an extra 7.65%. Here's the deal. While there is that tax savings, just know that then that portion of that income that you saved into the HSA doesn't count towards your Social Security. Okay, because you're avoiding FICA tax is 7.65%. 6.2 of that goes into fund the Social Security system. 1.45 goes to fund Medicare. Because you're avoiding, when you're contributing to the HSA out of your paycheck, because you're avoiding FICA tax, that money is not reported to Social Security, and therefore you don't get Social Security credits or benefits on that income. Take, for example, if you make $100,000 and you contribute $5,000 to your HSA right out of your paycheck, $95,000 is going to show up on your Social Security statement as counting towards your future Social Security calculation. Does that make sense? Not the full $100,000. Still, Social Security is based on 35 years of employment history, okay? And Medicare is not based on your wages at all, your eligibility for Medicare. It's just, did you work enough in order to be eligible for Medicare? If you did, wonderful. It doesn't mean you had to make a certain amount of money in order to receive certain extra benefits within Medicare. So that 1.45% of FICA that you're saving, that's pure savings. Within Social Security, okay, just know that the amount that you contribute out of your paycheck into the HSA doesn't count towards Social Security. I'll make that trade. I personally will, but just be aware of that. Do you have an HSA available? Which way is the best way to fund it for you? Work with your certified financial planner on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com, that's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.